Hi, my name is Jackie Slaughter. I'm with Senior Market Sales in the Long-Term Care Division. And today we want to talk about long-term care from the beginning to current day. And I have two gentlemen with me, and I will let them introduce themselves.
I'm Gary Cattleman. Jackie and I have worked together over the years for a long time now. Jackie was with me when we started my business, my wholesale business of helping agents and agencies around the country learn the product of long-term care and what we had to do to support them. I started out in this business when it was fairly young. It was just something that struck me to the point that this is really needed. You know, it's a risk-based product, and we had to help people understand what it was. And since then, we're still sitting together, and it's my pleasure to be here with you today, supporting this industry of risk management is what I would call it. So thank you for having me.
Thank you.
Good point.
Yeah.
Hi, Brent DeGroot. I am the Regional Account Director with One America currently, although I've worked with various companies over the years and really kind of been on both sides, the traditional and some of these asset-based solutions, which are kind of, you know, we're seeing some changes. So I've worked with you, Jackie, for many, many years as well.
Yeah.
So
This is true.
Yeah, collectively, I think we've got quite a bit of knowledge in this industry and seen a lot of changes. Gary, I've known you for many, many years as well.
Exactly.
So, just very happy to be here. So thank you.
Well, thank you. So, Gary, we're going to start with you.
Thanks, Jackie.
You've been in the LTC world for quite a while, and you've seen a lot of different changes in long-term care.
I sure have, Jackie. I started in this business, I would guess, in 1993 or 4. Started as an agent, and when we first started in this business, it was a lot of home health care policies, to be quite honest with you. And that's going back quite a ways. Nobody wanted to go to a nursing home at that point in their life. Everybody wanted to be taken care of in their own homes. Those carriers are all gone now. It just, you know, they demolished themselves in this industry by offering way too much for way too little. And so the history of long-term care kind of evolved. First one into it was CNA, to be quite honest with you, the largest carrier that offered benefits for not only home care but assisted living and nursing home. And those policies people were scrambling for back in the day. I was on the side of business as you were, Jackie, where you were advising agents and agencies all over the country. And that's what I did. Before you and I came together in 1996, I believe. So Jackie and I have been teammates for a long time. When long-term care originally started being sold, it was always done by an agent that kind of scared you a little bit about what's going to happen with the rest of your life. And I always came from a background of financial planning, meaning that when I looked at long-term care insurance, it was nothing but an asset preservation tool. And it was always something that was life insurance for the living. We use that statement all the time, and people just kind of stopped talking when we started talking that way. And it began to make a lot of sense. That particular type of success we had in the business worked its way into a worksite market that was not only a lot of fun, but was a lot of hard work for us. We became actually the largest producer in the country for worksite long-term care. I used to sit on the board, the general agency board of Unum Provident, who's not in the business anymore, but they're still the largest issuer of premium disability insurance in the country today. And we sold an awful lot of worksite long-term care because it was discriminatory in nature. We didn't need to offer it to everybody. And the senior people in an organization were always willing to take it out for those people to give them a benefit to protect their retirement accounts. And it just spread from there. A lot of fun, a lot of hard work, but a lot of meaning was put into that. And then from that point on, individual long-term care became way more important. And when I say individual, where you're buying benefits for home health care, you're buying benefits for assisted living, and God forbid, a nursing home. In today's world, nursing homes only see patients that own long-term care contracts for usually hospice care. So we're able to keep ourselves out of a nursing home as long as we've provided ourselves with enough benefit to take care of ourselves without depleting all our assets. So that's basically the start of where we started and how we kept going. And it was, we were doing the right thing, and we felt good about what we did.
Gary, I do have a question. When you were in the work site arena before you were doing individual and work site. When you're in the work site arena, did you find that most companies paid for the LTC insurance for their employees, or did you find it was a voluntary versus being paid by the employer?
Well, for most of the time, we always promoted the employer to pay a piece of the policy. And by doing that, we were allowed the employees to buy up to the level that they wanted. So there was skin in the game from both the employer and the employee. And by doing that, the laws were in such favor as it was a complete write-off for a business. You know, the front page of their 1040s to write those premiums off as expense. And for the employee, they were grateful usually to have a benefit in place, and they could add to it to the point they wanted to, up to quite a large benefit. And it was all based on how much money do you have? What do we need to protect from spend down? And when we offered it that way, it made sense to a lot of people. You know, they're not buying nursing home insurance. Once you get sick, it's not about you anymore. You know, it's about the rest of your family. How are you going to survive? And where's the money going to come from?
So, Brent, just real quick, as a regional sales director for various carriers, when it comes to long-term care, what differences do you see from the time that Gary was selling to today and with the products and changes?
Yeah, I've been in long-term care since 2002. So you got me by a few years there, Gary.
Yeah.
What's interesting, being that I was normally mainly at carriers, just to see a little bit different aspect in how plans were built and so on and so forth. Gary mentioned something, in the early days where it was all kind of separate policies, a stay-at-home policy, a nursing home policy, assisted living facility policy. And, talking with many actuaries over the years, it was really more beneficial for them to lump it all together. The risk was actually less by doing that. And so that's kind of where we've seen these comprehensive policies come out. That was starting back probably in not too far after that, 2004, somewhere around there, that range.
That's about right.
So yeah, those individual policies kind of fell by the wayside. The comprehensive policy came into place, and one of the things that I have long said when speaking with advisors, insurance professionals, whatever the case may be, a good long-term care insurance policy can be the exact thing that keeps you out of a nursing home. Correct. Because that is largely the general population still today doesn't want to necessarily go into a nursing home. So, seeing the advancement, if you will, of some of those policies over these years, even today, where we're seeing more of kind of a mixed benefit, if you will, asset-based type solutions. So not only the traditional market, but asset-based, or even just a life insurance policy with a rider. It really has brought more avenues and more information around long-term care planning, which I think is a good thing.
I agree.
Now, there's a double-edged sword to that. Certainly that can bring more information that a producer needs to really learn or focus on. That's where it becomes very important for organizations like Senior Market Sales to bring that education and so on and so forth to those advisors. But it's been there's a lot of change over that really 21 years even that I've been in long-term care.
Well, One America has been out there for a long time, and maybe a lot of people don't associate State Life as One America, which it was. So they went from a traditional type plan to a hybrid, as everyone's calling it, plan. So with that transition to hybrid, can you explain to us some of the products that you feel that or what's selling the best, or what people need to learn from it? I know you have a university you guys usually offer. There's one coming soon to a
Here in
neighborhood
Omaha,
near you.
yep. Really all this month.
I really would like you to talk about some of the plans that are a little different than a traditional. So traditional and hybrids really in the end do the same thing. It's just where you're going to look from the funding. The funding becomes an issue. Taxation also becomes an issue of what do you want to do between a traditional and a hybrid. But if you can give us some of the differences, because you also are the only one that I know of, unless I'm misled, that does non-qualified and qualified funding.
Yeah, thank you, Jackie. There's a lot in that question, so I might be talking
Can
for
you
a
get
while
it off?
here.
Go for it. You got the time.
That being said, what's interesting is One America has we've got a lot of firsts in long-term care planning. We were one of the first to come out with these asset-based solutions or hybrid solutions, whatever you want to call them. We've been doing this now 35 plus years. So really, if you look at the cycle times of a long-term care claim or a policy, if you will, the number that's thrown around a lot is 30 years before a client actually goes on claim. So knowing that, we're now 5, 6, 7 cycles into having policies being paid claims and that sort of thing. And that's obviously that's where the rubber meets the road, and that's what we're here for. We want to help certainly those consumers protect their livelihood and protect their families. So very long history. Let's see, what were some of the other things in there?
The niche that One America has.
So I will say that One America has a couple different offerings. We have it from a whole life chassis. So basically taking a whole life insurance plan as a base policy where we draw the long-term care benefits from first. And then we can add what we call a continuation of benefits rider. And that continuation of benefits rider, once that base policy is exhausted, so they use their asset first. Once those are exhausted, then the continuation of benefits rider kicks in and continues that same income stream. And that's really what we're looking for when it comes to long-term care claims, is the income for it, not necessarily assets that a client has. So the income is there, continue to pay that same income stream up to a lifetime, if you will. So that is another unique feature of One America, is that we do have a lifetime chassis. So not only do we have that, we've got a joint policy structure as well, putting two people on the same policy at the same time, which again, if you're adding that lifetime benefit, I think that really gives the total peace of mind when you're doing long-term care planning. Nobody knows who's going to need it, how long they're going to need it, how much it's going to cost. All of those aspects do enter in, but then when you've got a married couple, it's maybe even that much more important to say, I need to make sure that benefits never run out. So those are some first. We're the first and only with a lifetime benefit. First and only currently, at least, with a dual chassis. I mentioned the whole life chassis. The other chassis we have is an annuity chassis. And this largely we do for really one of three reasons. One, health reasons. Annuities don't have as many underwriting questions to go through, which is good. There are people out there that aren't in necessarily perfect health. The second would be age. We can go all the way up to age 85 on those planning options. And One America has really the widest breadth of ages that you can plan for. The third one is really utilizing the Pension Protection Act. And what that really afforded us in the long-term care insurance planning space is the fact that we could take an existing non-qualified annuity. And if we just 1035 that into a PPA eligible, Pension Protection Act eligible annuity, that we could get rid of all of the embedded gain in that contract, and all of that gain would become even interest tax-free,
Yeah.
right? So all the interest is tax-free if used for long-term care. So that is really a big reason that we're using our annuity suite. However, our whole life chassis is still probably 70% of that business versus 30 on the annuity side. So one other thing, if I can keep going here, I will quickly mention, yes, is we have the ability to use qualified funds. So One America has a lot of different ways that we can fund these types of solutions. And that brings a lot of options when any of the producers, the financial advisors are working with their clients to say, okay, well, let's look at your situation. Every client's different. How do we put a plan in place? So having numerous funding sources, even the qualified funds, I will say this, we've got a very simple way, kind of a one and done solution to using qualified funds. And if you think about where Americans are saving today, it's all in qualified money. We're very top heavy as a nation in qualified funds. So why not use some of those funds to plan for your long-term care? So we have a very simple way to do it, direct trustee to trustee transfer. We'll give it a bonus right off the top for whatever transfer comes over. Then we break that down, that full amount now, into 10 equal parts and fund a 10-pay whole life base policy plus a continuation of benefits rider. So really great way to utilize some of those qualified dollars. You know, one last piece that I'll mention on this, what's interesting about the numerous funding options are the fact that we're seeing more when asset-based solutions or hybrid solutions were really created. It was really a single pay option, and it was one and done solution, and repositioning of the portfolio or taking some lazy money and using that to fund your long-term care plan. Well, today's day and age, we're seeing more and more using a recurring premium type of solution to fund their long-term care plan, much more like maybe a traditional plan would be. As a matter of fact, 66% of our business last year, 2002, was done on one of our recurring premium basis. So we're seeing more and more planning done in that recurring premium space.
And that's what we're experiencing too at Senior Market Sales. Most people want the reoccurring, and you're talking about different generations getting long-term care.
Correct.
Yeah, the ages in your 40s, you have your 50s, and you have, of course, your baby boomers today who are experiencing it, which is helping long-term care at the finest. To be honest with you, we had a boom years ago with Worksite, and now you're starting to see baby boomers go through it with their parents. So experiencing it with their parents, they're going, if their parents didn't plan, guess what? Who's paying the bill, right? Or they've moved into the home, and so you can take care of them. And most people want to stay at home anyway. But in regards to long-term care, and we always look at the front part of it, the back part being a claim. And I think all three of us have gone through claims with people we know and love today. And that is a different avenue as part of the long-term care plan. I mean, it's the piece that you hope people don't have to use long-term care, but have planned for it, protecting assets, et cetera, not utilizing your kids or family members to take care of you versus, as our CLTC tells us, you know, spot CLTC. CLTC from the standpoint we're supervising care, it makes a difference, but there are still some, whomever is in charge or whoever the person is in control, so to speak, of that person's, you know, LTC and able to speak for them, they still have things to do, right? It's not just, I have a long-term care policy and boom, it's done. You still have some pieces that you have to still contribute to it. So long-term care is more, as Gary, you stated, the financial. Financial worry off the brain, I do believe the people that you guys talk to, whether they be producers or they be consumers, what is that conversation in regards to the financials? Either one of you both can answer on that one.
Well, I'm gonna state something that kind of falls into this dynamic. When I purchased my long-term care contracts with my wife, you know, I felt it necessary because my asset base was growing. That's the knowledge that I personally felt. To give you a quick idea of what can happen in life, my wife is today 65. At age 59, she had a seizure, and they found a brain tumor that is terminal. She's fortunately still alive with us today. If I did not have care for her, I wouldn't be able to sit here and talk to you today, number one. And number two, I would have been bankrupt. My policy has paid out $587,000 so far. And I don't care if it's on asset-based care or if it's on a regular long-term care insurance platform. We have to do something to protect ourselves because we never know what's going to happen tomorrow. You mentioned, you know, both type of policies work. Asset-based, and we offer asset-based long-term care. I'm not opposed to it at all. But there's got to be a right reason. Brent mentioned a 1035 exchange. Now, what is that, right? We haven't said what that is. Well, that's something that if you have a policy in force, we can exchange it for another policy in the same category without any tax consequences to gain your benefit. 1035 exchanges today are very important. I don't know how much of your particular business is 1035 exchange, but I imagine it's a pretty good chunk in today's world. Traditional long-term care back in the day, leverage was a little different issue in benefits, right?
Yes.
Long-term care is actually is categorized as health insurance. It's no more different than in, a disability-based policy. So they both work the same way. It's just a little easier in today's world, especially to train an advisor, what's the right way to go. We're starting to see long-term care worksite programs come back. We've got 10 pays now on the traditional side, again. And that market's starting to grow quite a bit as well because people are realizing, as Jackie mentioned, you know, our family members become ill. They're not able to take care of themselves in a proper fashion. I'm living with dementia, and that's really tough. But at least I'm out still promoting the right thing to do. You know, I had no desire to stop traveling. We do what we have to do in life to do the next right thing. That's why I don't want to get out of this business personally. You know, we've got to protect people's assets. We really do from spend down. And policies allow us to protect those assets from spend down, even if we run out of benefits. There's a clause of the long-term care partnership plan that says whatever benefits are paid out, you know, from a partnership type based policy, Those benefits are protected from spend down, God forbid if you run out of benefits. So there's a lot to this today, you know. It's not just taking care of mama in the house. It's really part of a financial planning decision that everybody needs to look at for themselves.
Yeah, if I could
Go
add
ahead.
a couple things there. I will not, just because I happen to work for an asset-based carrier,
Right.
I certainly believe in the traditional market as well. I don't think it'll ever disappear. I have nothing bad to say about it. As a matter of fact, I own a traditional long-term care policy. Now, I may be supplementing it with others, but that's the way it stands today.
Right.
So my parents I lost my mom in 17 from Alzheimer's, but yes, my parents both had traditional plans. So again, very much a good planning source as well. There are lots of great plans out there. And again, the thing that can keep you out of a nursing home, which is what most people want to do. So I thought I would mention that. But yeah, there's no ill will against any
No.
type of planning option out there.
But we have to remember, I'll call it back in the day, all you had was traditional.
Correct.
There were not life, based policies. There were not annuity-based policies. But if they were annuity-based, they were for nursing home. They were very specific, like we had the nursing home only, home health care only, et cetera. So today there are so many different options, and I'm like you guys. We got our plans back in the day when there were no other options.
Correct.
But today, people have no excuse except for our producers not introducing long-term care to their clients, never talking about the long-term care. We're finding that, and I think you find that too when you deal with on your different brokerage individuals, is that it's not the agent that's asking, it's the clients that are asking about long-term care. We need to be promoting it more. November is coming up for, LTC Awareness Month, which really should be every day, because we've all gone through a claim, so we understand how much this coverage is really needed. I mean, it makes a difference. I sit there and say how much money I saved my brothers. Do you know what I mean? Because they didn't have to contribute to anything because my mother had a plan too. And you're right, you can stack plans. Plans are a little different when you just
Right.
have the traditional. You can have as much as you want with many carriers as you want, but now we have a limitation by carriers
Yeah.
because of the risk. The risks are greater. People are understanding, and I think, Brent, you can talk to even Gary when you said, I've already spent $500,000 plus.
Yeah, I mean, if I
Go
can
ahead.
add to that, I mean, that's one of the main reasons that, One America has that lifetime option. And, you mentioned the partnership programs, which asset-based solutions aren't partnership qualified. And, that may change in the future, but right now I don't think any of the asset-based carriers have filed for partnership.
Nope.
When it comes to One America in particular, with that lifetime strategy, it really kind of takes that partnership
It does.
planning
Yeah, out of the
aspect out of it, because there's always going to be an income stream for those expenditures. So, but again, I think the partnership was designed for good reasons, and as long as you can afford a partnership policy on the traditional side, that's a good option as well.
Yeah, I think all the options that are out there fits for whatever the client wants. Because it's not about my opinion, your opinion, Gary's opinion. It's about the client and what they want to do. It's what they want to see out of a policy and what they want to see their future is as they age. Gary used to say fragile, and I hated the word fragile. It just sounds so negative, but yet it's the truth. There's not another word for it. To watch a family member become fragile when they can't do the things they normally do, even if they have all their facilities, but they can't do it, and they sit there and say, I can't do the things I used to do. It's hard to help them fill up because they can't, but it's part of aging. And that's part of that fragility that I sit there and go, I hated that word when you said it, but it's the only word I can think of that describes it, to hit home. You have to hit it home, not to frighten people, but it's the truth. If you watch, I think a lot of our younger individuals in their 40s and maybe in their 30s don't realize what the aging process is, because we go out there and we live our lives, right? We're invincible, so to speak. We're invincible until, we get older and we start seeing what our parents are going through. It doesn't hit you till then. Experience, I have to say, is the best teacher when it comes to this product, unfortunately, at that time. So hopefully, and I appreciate both of you, discussing long-term care with
Thank
me.
you, Jackie.
And with the experience we have here, we decided we have about 80 years of experience here of long-term care between the three of us. And three of us own long-term care, and that's part of the biggest thing. Our advisors need to own long-term care. It's hard to sell it when you don't own it. I don't care what kind of plan you have.
Right. And
How can you explain it?
it's a little different type of product to
Yeah.
talk to a client about. And, most producers just want us to offer,
Smalley stuff.
yeah, stuff, easy stuff,
Make sure
so to
policy gets
speak.
Easy
Yes,
things.
yes.
You have to learn, you have to understand, you have to learn the reason why. There's a lot of financial advisors out there that'll say, we don't need long-term care insurance because I could make more money for you with that money, that premium money, than you could make using long-term care. Well, I'll tell you what, that is not true from a personal standpoint by a long way.
If
You just can't do it.
Yeah.
It's way easier to protect your assets than to try to earn assets.
And there's a lot of objections through the years that have arisen when objecting to buy a long-term care plan or policy, whatever you want to call it, solution. But the biggest one that we've always faced and will continue to face is the self-funding aspect.
Right.
And I'll just self-fund this risk, and I will say there's a better way to self-fund.
Right.
There are options out there that will allow you to self-fund if that's what you want to do. But why not put a catastrophic backstop in place
Correct.
in case you need care for whether it's 12 months or 12 years, you've got something in place to really provide that income that you need for those expenditures.
Right.
What becomes interesting is that if a person hasn't planned, so which asset you're going to deplete first? Not only can it be an asset you're depleting, but tax consequences for depleting that asset.
Correct.
Or for any inheritance or any charities or anything you wanted to leave, that is out the window. It's gone. So thank you very much for having this conversation with me regarding
being
long-term
with you.
care.
Yes.
Same here.
Thank you as
we
well.
learned the old, we know the new, and hopefully people have learned something. Thank you.
Thank you,
Very much.
Jackie.